Welcome back to Morning Trade Live. It's time now for the big picture, so let's welcome in the team from Charles Schwab. We've got Liz Ann Sonders, Chief Investment Strategist, Schwab Centre for Financial Research, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Very good morning to you both. Let's start with you, Liz Ann. I mean, we've seen stocks popping, yields dropping. Thank you very much, Jensen Huang, and also the delayed September jobs report. What are your takeaways?
Yeah, so the jobs report was a bit of a mixed bag, I'd say. If you have a more optimistic assessment of the labor market, you could find things to point to, not least being the big jump in payrolls. But if you're on the more skeptical end of the spectrum, you could point to the downward revisions, the rise in the unemployment rate, although that was a function of the rise in labor force participation, which is sort of a good reason why the unemployment rate went up. So very much a mixed picture. But I think to your point about NVIDIA, I think that was the more powerful force in defining what the market is doing so far anyway today. So I think when you see the impact that has had on what we call the growth trio of sectors, tech, communication services, and consumer discretionary, which had not been the leadership areas, you absolutely can point to NVIDIA.
Yeah, all right. I just want to sort of get Mike's take on all of this. Obviously, given what we saw from the data, as Liz Ann sort of pointed out, I mean, you could look at this sort of glass half full, glass half empty. If you're looking at, the number as far as the headline, or if you're looking at the jobless rate, or if you're looking at some of the revisions in the previous months. But we're also not going to be getting that October jobs report cancelled because basically they couldn't collect it. So what does this mean now moving into that December meeting?
Yeah, I think it's going to be really tricky for the Fed, Sam, because they're not going to have the usual amount of data that they rely on. And as you note, that October jobs report, and remember that what we just got was the September jobs report. The October jobs report is just not going to happen. And then I think even once you get into the some of the other reports, you're looking at sort of partial estimates and that kind of thing. A lot of people think it's going to be January before you've really got a good handle on the sort of state of the economy. So I think that puts the Fed in a difficult position. And obviously, with some of the comments we've heard from Fed governors over the last week or two, there's a pretty wide divide that's opened up within the Fed about whether there should be a rate cut. So I think it's a very much up in the air kind of situation right now. We'll see, what else happens in the markets between now and the December 9th start of that meeting. But without all the data and with some of the skepticism that has been expressed by Fed governors over the last couple of weeks, you're seeing, expectations drop pretty significantly for a rate cut.
Okay. So, Liz Ann, now that we've got NVIDIA out of the way, very much signaling that the AI story and that narrative remains intact, and now we've obviously got some evidence of the data, albeit a little bit backward looking. What happens next? I mean, as we move into 2026, what are sort of the major themes that you're going to be paying attention to? I mean, have all these concerns around valuations and circularity of financing and depreciation worries gone away?
Not necessarily, but I think we're in a bit of a whipsaw kind of market where there are those underlying concerns about the circularity of financing, the fact that some financing is now coming via the debt markets and not the equity markets, concern about maybe some pressure on profit margins. In the case of a company like Oracle, CDS spreads kind of widening out. But then you get one earnings report that's better than expected, and that knee-jerk reaction is, buy the dip, go right back into those names. And I think that's the pattern that's likely to persist. There's still that bias to be in names like this. Obviously, given the cap-weighted nature of the major indexes, you get a lift like that. It accrues to the benefit of the cap-weighted indexes. You shift away from what had been leadership over the past month in areas like healthcare and energy. But you could get to a point where you get some other singular piece of news that then shifts that trade in the short term. And that's the nature of retail traders being in the driver's seat here, that arguably have time horizons that are not measured in months and years, but measured probably more in minutes and days.
Yeah, I think the Wall Street Journal put it pretty well this morning, talking about how Nvidia's strong results maybe just show that the AI fears that we've been seeing in the market in the last couple of weeks are just a bit premature for now. But you raise an interesting point around, obviously how they're getting their hands on this money as well, particularly using the example of Oracle too, which has been a big focus. Mike, just switching gears back to you, I do want to just talk about some of these tariffs and then obviously what's coming down the pike as far as the next sort of Supreme Court decisions, what this could mean for markets. There's an interesting article out from Reuters this morning talking about how they actually might delay some of the chip tariffs now because they don't want to rock the boat with China. What's your assessment of all of this?
Yeah, Sam, you're looking at some changes with tariffs going on. I mean, first of all, the president has rolled back some of the agriculture-related tariffs that I think is really, driven by the election outcome a couple of weeks ago, where affordability and cost of living was really a central reason that Democrats did well in some of the races nationally. So you're seeing a little bit of a response from the White House to ease back on the tariffs. But you mentioned the Supreme Court case, and that's going to be really interesting because those arguments were a couple of weeks ago, and now we're waiting for a decision on whether the bulk of those tariffs, the reciprocal tariffs, are even legal. And it opens up the possibility, if the court were to throw those out, that you would have north of $100 billion in tariff revenue that might have to be refunded to those who paid it. So a lot of sort of complicated uncertainty, I think, going on here. Don't exactly know when we're going to get that Supreme Court decision. Could be December. A lot of people expect it might be more like early 2026. But I think that's kind of put the tariff situation a little bit in limbo for the White House while they wait to see what happens. And they do have other ways to impose tariffs. But I think that's created a little bit of uncertainty going forward.
Yeah, it certainly has. And I mean, then we heard from Walmart, obviously, which appears to be sort of eating it in the supply chain somewhere. At least that's what the numbers appear to be suggesting. But we'll have to wait and see. Liz Ann Sonders, Mike Townsend, always a pleasure to have both of you on the program. Thank you so much. Appreciate your time.